got a sample I've got a sample crude trade for you that I just did really quick, where I was just doing a little scalping, and it's based upon the Delta Divergence, a little hot potato trade. So let's take a look at that. So this is what it looks like, and this is the Delta Divergence. It's a real-time indicator that gauges the strength between aggressive buyers or aggressive sellers. And what this indicator does is really interesting, and I really love it, enjoy it. I wish I'd have came up with the concept. I didn't. You can see here that this is a low, this is a new low, and at that point what this does is it calculates between the bid and the ask, and it calculates if there's more aggressive buying or if there's more aggressive selling. Now obviously at the bottom it's going to gauge, is there more aggressive, are the buyers more aggressive here? And if they are, what it'll do is you'll get this blue little histogram. It tells you, hey, step in here and buy this thing. Give it a shot. Tight stop and try to see if it'll bottom. Well, there's one trade, okay, and then here's the other one. Makes a low or equal low. The buyers get a little aggressive here. You see the blue histogram, and then from there, I scalped the move from about here to there. Just nice, so quick scalp. But obviously, if you are lucky enough to hold it, you can see kind of the trade that you could have had if you would have been long in this area and held on to it. So it's a long of about 84.28 all the way to 86.50-ish. Good little trade in crude if you can get it and if you can hold on to it. Obviously, depends on how you're trading the thing. But I've got a little 3-minute video on that. Hope you enjoy that. Good luck. Hope it helps. And I'll see you tomorrow. All right, in this trading video, what we're looking at is the Delta Divergence. Delta Divergence is an indicator that will tell you when there are more aggressive buyers or aggressive sellers. Basically what it does is what it's looking for and you can see this last signal, and then there's this current signal that we're in right now. What you're looking for that this indicator does is it looks for a low, a new low, or a current low, and it'll look at the bid ask in the depth of market, and it'll tell you whether the buying is more aggressive or if the selling is more aggressive. So in other words, when it's making a new low or a current low, if you see a blue histogram, that's a long, okay? So in this trade that we're in right here, and we're just using one little itty-bitty contract to show you how it works, you can see we've got long right here as it fired off at 884.24, so just a few ticks below this, and it signaled that it was going lower and that we could potentially buy this because we have a more aggressive buyers than sellers at this current low. So here's how I trade this setup. What I do is I use a 10-tick stop loss with a 30-tick target. Now, I don't always get that hit, rarely ever, tell you the truth. But what you're looking for is just to get into a decent trade with scalp opportunity so that you can scalp your way out of it. Now, if you trade multiple contracts, not a big deal. Just add more contracts, it's not a big deal, and you can go all in, scale out, or you can go all in, all out. Or if you wanted to, I guess you could potentially scale into the trade. But this is how the trade setup works, and you can see that it's pretty effective of picking the little minor bounces off of sell-offs. It also works in the down direction too. If you had a market that was going up and then you saw a magenta or a purple line that was porting down, that would tell you, like, hey, heads up, the sellers are more aggressive than the buyers. But in this case, you can see that we've got the buyers here at this little blue line were more aggressive at this low than the sellers were. So we're running out of a little bit of gas here, so I'm going to flatten that out. And you can see just on one contract, 130, not a lot of money, but a decent little pop-up trade, a little scalp, and then you can see it's getting a little bit more positive here. So overall, it's a really, really good indicator to keep you on the right side, and it actually is a great way to teach you how to grab or catch a falling knife. Now, catching a falling knife can be tricky. It can be done, but it's tricky. You got to know the right way to do it. And then it's a real-time indicator. You can't go back in time. And you can see that I placed this on the chart earlier today. This is just because it runs in real time, because I placed it on the chart at 10 o'clock. You can't see anything in the past. It's a real-time indicator where you put it on there and it chews on the depth of market, the bid ask, and tells you whether there's more price action going off at the bid or the ask, and the aggressiveness of the two. So good luck, hope it helps, and I'll see you tomorrow.